Welcome to the Dubai Real Estate Club podcast. My guest today is a best-selling author, speaker, associate professor of Dubai Real Estate, and received a doctorate degree in property valuation within the Dubai real estate market. He is widely one of the most recognised and sought-after experts in the field, regularly appearing on leading media outlets within the region. He recently published one of the first academic-based books on the Dubai real estate market called The Essential Guide to the Dubai Real Estate Market, which has received countless plaudits from around the world, from everyday property owners to global experts alike. Ladies and gentlemen, please welcome my guest, Dr. Michael Waters. Welcome.
Thank you, Greg. Thank you for that introduction.
Well, it's well deserved, and it's a bit of a special episode, really. So typically on the podcast, listeners will send in questions, we answer them, and go into the depth so they get a real life insight into the Dubai real estate market. However, today, as we've just released this book, I want to delve into each chapter of the book and ask one question around it, because a lot of people listening won't understand or even know this information. And in an industry sometimes where it's difficult to get hold of the trusted information, this is going to be very, very interesting for them.
Okay.
However, like all good episodes of the Dubai Real Estate Club podcast, we start with quick fire questions. Okay.
Yep.
So these are 8 quick fire questions. No right or wrong answer. Just whatever comes to head. So,
yeah.
What is your favorite restaurant in Dubai?
Most recently, C'est La Vie.
Oh, nice. Where's that? Is that?
Sky Address
Ooh.
Hotel downtown.
Oh, yeah, I like the address. Good.
Yep.
You have to pick one main developer in Dubai to build your dream luxury house. Who do you pick?
Ema.
Interesting. Any particular reason?
No hesitation. Reputation, build quality. Good product.
Interesting. Describe the Dubai real estate market in one word.
Well, it's bubbling hot at the moment.
Boiling hot. I'll give you 2.
Two words. Boiling. Scorching.
That's fine.
Anything that's temperature wise.
Your favourite thing to do / day out in Dubai when you have a day off?
Oh, day off. Probably just a simple beach day with the family.
Yeah. Kite Beach?
Kite Beach,
Yeah,
it's one of my favourites.
That's my Sunday morning spot. Yeah.
Good coffee.
Your favourite Dubai area / community?
I'm trying to think of something that isn't too close to home, but
No, home ones.
Again, probably for the buzz, it's somewhere like City Walks, quite a nice mix of.
Quite underrated as well,
Yeah.
especially with investors.
Dubai Harbour's quite nice. Yeah. A few nice places down there are starting to open up. So
definitely.
Yep.
The one thing you love about Dubai more than anything else?
The weather.
Yeah. Especially in the summer.
Yeah, especially now.
Well,
yeah.
It's getting
the
hotter.
weather, yeah.
Last 2. In your opinion, what's the biggest common myth about Dubai that people have who don't live here?
Not so much now, but it used to be. I used to get asked when I went back home, what music do they listen to in Dubai, which I always thought was
a random one.
An odd one. So,
see, people always say to me, the first thing they say, "Oh, it must be so expensive," and I always say, "Yeah, it can be."
Yeah.
But where I actually live, so I live out in Silicon.
Yeah.
And mine in my wife's apartment, 2 beds, same square footage as the one we had in Liverpool city centre. Our cost per living per month is around £800 cheaper.
Yeah. Probably the mindset is, luxurious, high end, expensive.
What they see on Instagram.
It's there's a whole mix of lifestyle.
That's the one thing I do love about it. There's something for everyone.
Yeah.
That's one thing that's how I would describe Dubai. It's something for everyone here.
Yeah, that's a better answer than mine. I'll use that next
time. So last one, is the Dubai property market a bubble?
No.
Good.
I'll tell you why when we get into those questions.
So we're now going to move on to 12 questions, or if we get through 12, we'll see. But each of these questions for the listeners are based upon this essential guide of the Dubai real estate market. Okay.
Yep.
So I'm just going to ask 12 and then we'll have obviously conversation off each. So question 1 is, how did Dubai become a global real estate market?
Okay. So, if you try and get into my head a little bit of what I was, so the first chapter of the book was trying to sort of pinpoint the economic forces of how did, as you just said, how did Dubai become this global real estate hub? And I think when you look through that chapter, the fundamentals that have driven Dubai. Obviously the geographical location is one of them. That hasn't changed, and will always be a strong anchor point for why business is set up here, why people choose to live here. The distance, the short distance of access to other global places is such an important factor. I think initially when it was attracting an expatriate workforce, that proximity to other places was important. And so you've got that the free market of Dubai. So you've got kind of those forces. Why do businesses set up in a city and sort of thrive in a city? And then I guess if you look at economics and business, you've got the business plan of the government. The branding of Dubai has been fantastic.
It's phenomenal.
If you think about just one example of Emirates Airlines and its exposure globally, the brands that are coming from Dubai, you kind of they've become global names. So there's that side of things, and then the general governance, so how you regulate a city. And the vision for Dubai was always to look at other markets and learn from the mistakes, of their planning systems, the things that, there was big tours where they would look at the cities and say, these are the things that people like about city X or city Y. We want to create that in Dubai. So I think that's been a successful measure, and I think that's where they're always looking. And sorry, just to finish, possibly now, there's always that comparison, isn't it? Is Dubai should be doing this because a more mature market does this. But actually, I think we're probably at a stage where other countries and other cities can learn from what Dubai has achieved and how it's.
I think it's one thing to me. It's such one of these, I believe, also it's such an attractive place to live because of that. And you saw some of the greatest global leaders of all time. I believe the people who built Dubai, Highness will go down in history as one of the greatest global leaders ever to have lived. Their vision and the way they execute it, the efficiency they do, I think that's one that attracted me here. It's just you believe in it. I think it's you look at other good governments. I know Dubai's a bit different in terms of the way it's structured, but the UK and the uproar, that sort of stuff, and Dubai's ran very, very differently.
Yeah.
But just people here seem to just be on board with where it's going in the vision, and it's a kind of like a harmony.
Yeah, so that first chapter of the book is kind of trying to show the historical development, but also look a little bit to the future and see where, of course, 2040 is the new blueprint of what Dubai will look like.
I'm sure there'll be another one beyond there.
Yeah. Well, of course there would be, but that gives investors and the real estate stakeholders a lot more confidence when you can start to actually see how the city's going to be mapped out. Which prior to, there's been 6 or 7 master plans in Dubai, but I think more importantly, we've seen it evolve. We've seen it. It's got to a critical mass now that is attractive, and again we hear time and time again about how great the city is, and the diversity of housing choice, the diversity of places to go, the diversity of the people in the city. They're all big, draws to multinational companies that need all of those things to work for their talent pool.
I would say you've got everything in one place.
Yeah.
Plus more. I completely agree.
There we go.
So what is the current Dubai and UAE property market performance and some of the key characteristics around that?
Yeah, so again moving through the discussion, it was kind of just mapping out what is the Dubai real estate comprising of, where's the investment activity, and the weighting of that predominantly being on the residential market versus the commercial market, and then discussing factors as to why that residential sector of the market has been so popular, and the challenges and the opportunities that exist within the commercial setting. So that obviously that's been cyclical, like any real estate market. We're kind of entering the third real estate cycle in Dubai, on the upside of that cycle. So the 2 previous cycles have been fairly different. The first one was very speculative led. Any new market, you're testing price points, you're testing product, you're going to have different types of investment mentalities. The developers in the second cycle really anchored into affordability and building the city as affordable for families and so on. And perhaps looking back, that was rather oversupplied, and that led to a bit of a slump for a few years, and of course overshot a little bit more with what we all lived through with the pandemic and so on. Again, normally these cycles and the downsides are triggered by something that's not on our radar. It's something fairly sharp and fierce. But I think the third cycle is going to be built off the value. So Dubai, I think, is still a fairly undervalued real estate market, and it's also serviced much better with data. So when you've got more data, you're going to get much more informed decisions, and people you're going to be pricing in less risk into that, because you've got 15 years of good transactional data behind that decision.
Definitely.
Which obviously earlier in the cycle you had to kind of guesstimate or take a punt, or
that was one of the things that did surprise me positively. It was a good thing, was the amount of data, transactional data you have available to looking at other markets. It's sometimes not available, hidden, very difficult to access, even if you can't access it at all. And I think that's also maybe a key characteristic of why Dubai is so popular with investors. Is when you're making an investment, there's emotion involved, but you look at the numbers, and you have actual numbers there to look at when presented in the right way, of course.
And I think the secondary portals, or the portals that exist that take the raw transactional data from DLD, they're also offering the public and investors and clients much more targeted information. So it's, we can start to look at things like, total returns, income returns, capital gain, as we would in other markets. So we can start to make that comparative view on how the real estate market's performed for investors. And equally, again, another example with the data that we can, I can look at transactions today that were done yesterday. In the UK, you're waiting a few months. So there is, it's caught up and overtaken some of the challenges historically. So as I said, I think in this third cycle, and I think what we're starting to see play out is Dubai is undervalued, and now I've got better data. I don't need to be so concerned about the volatility and the risk.
Transparency
will drive the prices to be more international, if we want to call it.
Back to the question I asked before, in terms of how Dubai looks at other markets. Presume that's probably a thing that they did look at in other real estate markets and go, hang on a minute, that's potentially a downside, an issue. Let's make it better.
Yeah, and the government have been receptive to outside information. So one example in the transparency area is JLL. JLL do a global transparency index every 2 years, and since 2004, clearly I've put it, but since 2004, they measure global markets, and the Dubai government have listened to those milestones, and they've addressed the challenges to move from an opaque to a semi-transparent to a transparent market in a relatively short amount of time through the portals, through the open data. So again, a government that's receptive and listening to, how can we make this a better real estate market? How can we govern it? How can we regulate it? How can we attract more interest? That's been very receptive. So again, it just ties in with that first part of having an open-minded government. Is really important, I think.
Definitely. Yeah, no, for sure. So third question is, talk me through the Dubai residential property cycle, because you did touch on it then.
Yeah.
So maybe just talk to it in a bit more depth and some dates as well, because a lot of listeners might say, actually, do you know what? Yeah, I bought in that cycle. I potentially lost in that cycle. So yeah.
Yeah. So the cycles are, as you said, the cycles that I spoke about predominantly on the residential side. We've only just started to really measure the commercial property cycle since the last 5 or 6 years. So it's a fairly infantile amount of data. But the residential market is the one that catches the headlines. It's the one that's about more socially, and certainly I get asked, and I'm sure you do, a lot of questions about where is it going. So the first cycle, I mean, the real pinching point, and one of the motivations for putting the book together is, we've got a 20-year history since foreign nationals have been permitted to buy real estate here. So from 2003, 4, or 2002, 3, and 4, that was the that was the real starting point for foreign investors here. And the run up in that first cycle was sharp and fast. There was a lot of excitement and a lot of aspiration built into the market. We don't know what it would have looked like if we didn't have the financial crisis, but we did have the financial crisis, and that shook the market like it did, like any of the other real estate markets, but recovered quite quickly. So towards the end of 2010, early 2011 is when you started to see renewed confidence. There were some things that were established and sorted out and smoothed out regionally, which again sort of anchor points to that resurgence. And so from 2011 up until sort of 2014, again, a fairly sharp and quick increase. So we've kind of seen a similar pattern recently where we have this fall, we have this economic shock, although one was financial and one was more, health-based, but there was a unexpected thing. It was more of a government-led lockdown. It wasn't economic slump or financial risk. So there was these things that kind of triggered that, and then bouncing back up. So sometimes when we look at the market, we anchor ourselves to it's grown 35%, and we don't take a wide lens look at the market and say, actually, we had a couple of years of uncertainty caused by factor X, and actually the growth rate's quite steady and stable. So people who, when we hear it's gone up 35%, it can't go up any more than that. You sort of kind of think it's a bubble. Then you start having the conversation. Is it a bubble? So
I get asked that on a daily basis.
So we kind of get that. That's kind of, again, because we didn't have the data to inform and to see, it was hard to evaluate. And the expo again was a big impetus in the market. So towards the end of 2013, that was announced, and Dubai was going to be the place where the whole world was going to come and fall in love with Dubai. And like with any announcement like that, although it wasn't on the same scale as other mega events, it has an impact on people's behaviour, and there was a lot of confidence in the market. What cooled the market off, because the government didn't want things to be as wild west as an unregulated market, was the the mortgage caps that came in and the doubling of the transfer fees that happened around that time to cool any speculation in the market, because the market was getting carried away with itself. That's kind of a hurdle to get over if you want to buy real estate, but it also protects. There's a protection element to that from the central bank. So you don't want to be in markets where you're putting 5% deposits, prices are wildly increasing, and then you lose out because you got into the game late in the day. So by putting down a bit of equity in the market, or more equity than other markets, there's a bit of a stabilization effect with that policy. So I don't think that triggered the slowdown. I think it was more to do with there was some economic issues. There was a period of oversupply. So again, in those first two cycles, because the city has to grow, it has to get to a critical mass. It had population aspirations, as it does now. There's a fierce amount of building that goes on to create a city, doesn't it? So you're going to get
from scratch in a desert.
You're going to get oversupply, and so obviously at periods of time, that oversupply means prices slump. And people have cheaper rents, and it's more affordable. And then once that gets absorbed, you enter another cycle.
I was having a conversation with a landlord who brought in Al Fajan, 3 properties in Al Fajan, in 07 at the peak, before the 08 crisis.
And he bought in 14 as well, didn't he?
Yep, he did.
Okay.
Yeah. Literally bought,
When's he buying
bought
next?
14. I know. And he said, so he's got a mortgage on all three of them,
Okay.
and he said he's literally just been paying off interest
Okay.
since 2007.
Yeah. Okay.
And he's obviously now selling, but he's selling at a
better
decent
price,
loss.
yeah. Oh, okay. Still a loss.
Yeah,
Okay.
it's still a loss in that area. I know
Okay.
other areas to Dubai may vary, and he was just like, so that's where I started to understand, like, obviously speaking about cycles, but actually having a conversation with someone about who's bought in the cycles at the worst time.
Yeah.
But yeah, it's
Good sort of anchor point to have, and find out when he's buying next.
Yeah.
If he's buying, let us know.
I know that's a good point actually.
But no, I think so. Then there was a much steadier decline. So from top of 2014, I think it probably it got extended a bit with the pandemic. I think Dubai would have come out a bit more, and people were kind of asking the question, "What's Expo going to do?" It's not changed.
That's how I first heard about Dubai. Was Expo.
Yeah. So often often at the announcement you get euphoria, but it's actually the biggest price gains are at the end. So there's again data in the book about that fact. So it's looked at previous expos. It's measured the importance of the announcement of an expo, particularly in these young cities, and the fact that hosting something like the expo is hugely beneficial for just urban planning and again building new districts and not just attracting investment.
Of course,
And post the expo is where you'd most likely see most of the price growth. And
definitely.
I mean, it's not just down to one factor, but of course, if you look back and you saw, well, we've kind of seen that, haven't we, with what's happened here?
Sure, yeah. No, very interesting. Next question is for investors, which a lot of people who listen to this, and I speak to now, as we've covered before, are investor based. I guess, in fact, investor based also any end user is also an investor because they obviously want to increase the equity and value of the property. But how might investment in Dubai property diversify their portfolio, and what are some of the key drivers for investors?
Okay.
So this is more, I guess, people who might already have a place in Dubai or maybe somewhere else in the world, and they're doing it purely for investment terms.
Yeah, I put this chapter together at the end of residential to kind of, because again, there's a lot of information, or there's a lot of discussion. I don't know how far these discussions go. I sometimes answer questions and walk away. I never find out what people have done with that information. But I wanted to put a chapter together that kind of looked at that objectively, looked at the fact that, what are the credible benefits of investing in Dubai if you want to diversify? Because of course, I think when I first came here, it was very much the mindset was a home bias. I'll work here, I'll send some money home, I'll save a deposit for a house, whatever the reason it was. I mean, I don't think it was just the circle of friends that I had. I think that was generally
people didn't see it as home.
Yeah, so that it was very much the attention was on the home country, and kind of fast forward the saving to get a deposit in the home market. I think would be a fair generalisation. Obviously, the issue when you do that, if I keep with our home country, the UK market, you've got various things that can go wrong if you put all your money in one market, like the currency, like the performance of the real estate market. Although the UK has been doing well, the purchasing power to buy internationally has been completely forgone with the currency issues. So there's various rational reasons for why you'd want to, as an expat who perhaps doesn't know where their final, I don't mean where they're going to die. I just mean their final destination's going to be.
I'm in that position. Like me and my wife are here. We've moved here. I can't see us leaving for years and years and years.
Yeah.
But everyone I speak to, I was having a conversation last night. We went out for dinner. Who said the same thing? Like, he said, "Oh, I might end up in Croatia." Or stuff, but everyone seems to love Dubai, but I will end up at the end. But maybe that's something that will change.
It's a dollar denominated currency you're investing, isn't it? The dirham is pegged to the dollar, so you've got that. That's a fairly strong currency to be investing and having support. There's that you're investing into the fact that Dubai is a growing economy, and maybe the shift of economic power is going to be moving more towards the Middle East, away from Europe, and therefore, if you have got all your equity in a more traditional location, you're missing out on the growth and development that new markets offer. Of course, real estate, you can't diversify it very well like we can in stocks and bonds, because you need to be super rich and super wealthy to do that. But there are mechanisms now, particularly for younger, our generation still, I'm not that old, but younger investors who want to kind of enter Dubai. You can buy fractional stakes in real estate, so you can buy with as little as 500 dirhams or 1,000 dirhams. Yeah, it's not going to make you super rich, but it gives you an exposure to a new market. You can kind of enter that,
testing the water,
and perhaps use that vehicle to save for the deposit to buy your first investment or something like that. DLD has the fractional title deed. 4 people can invest here. So there are more affordable ways. So one of the chapter started off by saying, let's get over the affordability issue of Dubai. This is kind of, if you want to invest here, these are some numbers behind, how much you need to put aside, the propensity to save. I know it sounds boring, but if we want to achieve a bit of financial leverage ourselves, we've got to sacrifice a bit of our income today to invest in the future. So it's looking at that element. But also, I looked at some key communities: Business Bay, JVC, Downtown, Palm Jumeirah, to see how it performed over as far back as I could go, which was sort of 10 good years of price performance, so 2012 to 2022. How would that have compared as a price gain versus other more typical expat investments, stocks and bonds, ETFs, that kind of thing? So there was an outperformance in some of those stronger communities over that period of time. But as I've just explained, you're kind of, bottom and top of the market with that analysis. So I think the chapter doesn't try and say, like, every time you buy here, you're going to do well. It just picks up on the essence of, spread your bets. Dubai's got a great business plan behind it. If you are an expat here with a medium to long-term vision, you'd probably do quite well of just having something behind you.
Basic investor principles. When I've got investments, I'm sure you have, and I am diversified, and it's having those basic principles of not just looking at the short-term gains, but the 5, 10, 15 years. Yeah. And I know for me, again, we're probably both biased being in Dubai, but if you look at the data in the book that you've written, again, depends on the area, and you can't say this, but I just can't see, like,
the city. So with rents and the price gain over 14 or 15 years, it's a long term sort of annualized 11% or 11.5% return on your money. So if you've got the emotional, like any investment, if you've got the emotional control, and the discipline and the plan to say, this is why I'm going to invest here. Often people ask, should I buy? They're trying to think, if someone's made 30%, I should have bought because I would have made 30%. It's not the right headspace. You've got to go and say, look, rational think, this is how much we can afford. This is what we might go for. And it might be that you start off, fairly low and have a small investment property, and that offsets some of your other investments elsewhere. I mean, it is all
everyone's
personal.
situations different, but those basic principles still apply. I think people think Dubai suddenly is this, like, obviously it is an amazing and an incredibly growing place, but the basic fundamentals of investment still apply. 100%. Yeah. Great. So next one is professional practices of real estate in Dubai currently, which you cover in chapter 6. How do you view the current state of the professional world of brokerages in Dubai at the moment?
Okay. No, I think, so the professional practices element of the book was to focus in on some key parts of, the regulation in the market, and the fact that there's still audiences of people that are unfamiliar with, leasing practices and buying and selling
It's very
processes.
different.
So again, it was laying the foundations to all of that. I think again, it all comes back to regulation and controlling industries and building confidence. And the brokerage licensing that's obviously been established is one way to do that. And I think unfortunately, as an industry, governments can't do a lot about it. It's just the nature of the profession. Is it's a fairly low barrier to entry industry in the sense of, as we see now, people are turning from different skill sets, industries, jobs, and they all want to become real estate brokers because that's where some of the money in Dubai is. I've heard. So that means that there's a lot of competition. But you kind of would then offset that with the fact that there are some. It takes time, like it does in any market, to build up a good client base, a loyal client base, build trust, build a reputation, and possibly if someone analysed the sort of the top number of transactions per brokerage, it's going to be lopsided, isn't it? It's not evenly distributed across the 3,000 brokers that are all in Dubai. So I think they're doing as much as they can. There's got to have regulation. There's got to be sort of a code of ethics. But customers these days, they're all kind of waking up to the fact that I can get data.
They've got more,
so they've got more control in that process.
Especially compared to other markets, which I think is right. They should be making informed decisions, not based upon just one broker's word or a broker's word. Like, they should be able to see the data, because it's at the end of the day, it's their money. Yes, you want to trust the person you're working with, and that's fundamental. But they should be able to.
But
see that
most people's experience in the real estate industry is the interaction they have with brokers. So it's kind of
they're the first port of call.
The first part of the so having that trust and having those qualification courses and having brokers up to speed with what the current legislations are, so that they could advise customers is good. So I think it's like any industry. And now we're starting to see brokers wanting to differentiate themselves. So if you look at how do you get exactly, doing podcasts, how do you get competitive advantage? How are you differentiating yourself? How are you building those longer term relationships? And I think there's certainly more to be done in any industry. So real estate agencies is no different. But I think how the agents are developing their own business models as well as the regulation, I think is improved vastly since.
Definitely, and it's always evolving. I mean, look what we're doing now. I don't know if 5 years ago, like, would this have been a thing? I don't know. I'm sure there were one or two in the market, but it's building the trust and giving the value, so they feel that they can trust you just beyond the commission check. And that's kind of what whenever I speak to clients, like, I want to have your best interests at heart always first. And if that happens, you typically, I don't know, it just not as in real estate, but just in any industry, if you do the right thing over a long enough period of time, it compounds and good comes back to you, whether that's financially, fulfillment, whatever that is. So I think we're definitely on the same page with that.
So the agency and brokerage is one side, then there's the valuation. How is that market regulated? How do we even look at the different assets here? Some elements on commercial practices as well. So a whole range of different fields to cover, but trying to pick up on the more interesting ones.
No, really it's fascinating, because it's not just opinion. It's this is what I was saying when I was showing the book. It's like you can see the physical data, and this is why it's so good for end users to pick up this book and read it as well, just because it is a textbook. It's like when I need to know something now, I'm referring back to this book. I don't know how you designed it to be used, but that's how I've used it even over the last few weeks.
Yeah, I mean, I think I tried to get I've been teaching and teaching in an academic institution since I came here in 2009, as well as having conversations with sort of the graduate level surveyors as well. So you kind of get an idea from their perspective, and that there was an audience there that's wanted to know more. You've got graduates still coming from other markets and getting jobs here who aren't up to speed with
lots to get your head around
with everything, but also a master's program or a university degree isn't for everyone. And if you wanted to find out more about Dubai real estate, you should be able to just have something available. So that was one of the motivations, for the agents to have a bit of a working
manual
knowledge.
Almost, a
manual. You can call it what you want, a Bible, a
textbook, manual, Bible.
So that, and then the investors, those people that said, should I buy here? There's the information. I'm not. Again, there's a disclaimer in there about
no bias in it. It's always,
whatever financial decisions you make by reading this book, you're on your own.
Yeah.
But I think there's a lot of misconceptions. So it's what is the price? So away from the headlines, how has Dubai done as a city if you'd have invested? So I spoke a little bit about the 11.5%, but the price swings aren't as obviously. The growth over the long term is much more subdued, around sort of 3 or 4%, which is more. Again, it's taking a mean average, but it's more. That's how you should look at the market.
Definitely.
Don't buy it thinking next year it's going to be 20% or 30% because you're just going to be disappointed.
Comes back to the basic principles also that we said.
I mean, if it goes up 20%, well done. But plan for less.
Anything else is a bonus.
Yeah.
So number 7, are you better to own or lease in the Dubai property market at the moment? And what's the upside and downside of both?
Okay, I presented this kind of analysis more on the commercial because I wanted to move away from just talking residential all the time. I haven't got, again, I look at it as an appraisal. I look at it, and again, it's with the best intentions in the world to map out and say you're better off.
Of course,
buying today or renting.
It's case by case.
You're taking current information that may not materialize in the future. But I think, long term or even moderate term, you're better off buying. It doesn't take that many. In the early years, when you could get a return, an income return of about 10%. You're not waiting that long to get your money back, even if things went wrong, and if things did better, you've even shorter windows. So probably people who are buying in the early years, they're getting high, 15, 16% returns if they've kept those investments and haven't cashed out. So that's they're good solid reasons. I mean, I've said on other podcasts, I look at things a bit more from a utility perspective.
That's why it's interesting. That's why I find it, because most people that I deal with on a day-to-day basis don't. So it's really I really enjoy and
So I don't
it's
try.
just different perspectives.
It's an opportunity. What you're not paying what you're paying on a mortgage can be fairly fixed, although rates move and mortgages move.
Of course,
you're fixing your future costs. That was a motivation for entering the market. Definitely. In the first place, is that I can fix my costs, and if the market goes as wild as what it was before, I'm okay. And again, that's a utility. I'm not looking at and then I'm getting the location that I want to live in, and I'm fixing that.
There's more elements to it than just especially if it's your family home. And I had a conversation on the episode 1 with Connor from the mortgage, and he was saying, one question I put to him was someone sent in was about our mortgage rate's going to drop, all that sort of stuff. And it's like, if it's your family home, it's like it's more than just yes, you want it to be a good investment, obviously, but it's more than just the money as well. If that's where you're going to stay for 10, 15 years, like none of us know how long we're
tend not to make the best investments your home, because as you say, the motivations are different.
It's different. It's
the KPIs that we're measuring it on are completely different.
It's more emotional.
So you're buying it for various other factors that may or may not be financially as sensible as buying for the highest return on your capital and so on. So I always advocate, but if you can buy and you want to be here and you feel this is somewhere that you'd want to be placed and invest, then of course, buying does make more sense.
I agree.
Rent is kind of like lost money at the end of that.
That's
term,
how I was always
Mm.
taught as a kid. My dad said, renting again, you're burning money. There's a place to do it, and you can't. Not everyone can afford to buy.
Yeah, but I think it's buying with a plan and buying sensibly, and not obviously buying something that is kind of
comes back to the principles again.
Same principles of start off like, don't go all in to begin with. See how it works as an investment. I've met people that are knowledgeable and educated. They've bought 1 year, they've sold within 18 months, and I'm like, surely you can't have. And this isn't on the high end. This isn't on the increase. This is on the fall. So I'm like, surely the reason why you bought 18 months ago hasn't materially changed for you to just sell. So again, it's if you don't have a plan to anything, it unravels, and I think that's what's it happens with any investment, doesn't it?
Yeah.
There's a whole series of things I could rattle off where people have bought just because
you got to hold your nerve a lot of times.
They wanted to get it, but I think buying works. There's a few sort of basic appraisals to that. Renting also works. I mean, renting is a good option if you want to obviously keep flexible.
Of course, yeah.
You want to try an area. You don't want to be buying straight away, do you? Because you don't know what that area is. Yeah, try before you buy. So there's various reasons why you would want to rent as well. It's personal to different circumstances that people are in.
Definitely, completely agree. So you mentioned property valuations. So what are some of the key differences in valuing property in Dubai compared to other international markets?
Okay, I'm going to turn the question to start off with the similarities.
Yeah, there we go.
I'm going to answer the questions I want to answer. No, I mean, the methods are the same. There's five key methods to valuing all real estate, whether that's residential or commercial and industrial, and obviously the most common one that you and I would sort of face would be the comparative method and the investment method. So looking at transactions and looking at prices that other people have paid historically, and that's how valuers are kind of looking at things. So now we've got better data sets, then that whole process is fairly similar to other markets. Early on in the development of Dubai, valuers had to make a lot of assumptions and do a lot of legwork to find qualified information behind their assumptions in their valuation reports. I mean, even the book starts to look at the future of valuation. The fact that we're probably at a point now where we can have some level of autonomous valuations here, so that all the risk elements that banks take on when they value the villas and the flats that people leverage on can be done behind the scenes, and they can click a button and see where that exposure is.
Definitely.
And hopefully that leads to better product for customers. So when the risk is compressed because we've got a longer track record and we've got better data, then normally, I would hope that there's a more diversity in the products that we can get offered as customers, whether that's first-time buyers or end users. We start to see segregation in the way in which banks are classifying different customers, which we haven't seen so much of that.
And you mentioned the 5 things when valuing.
5 methods.
Yeah, I mean, I've read the book, but just for the listeners, just quickly rattle off the 5.
Well, there's the comparative. So there's the comparative method, which is based on what I said. Someone's paid 2 million last week for the same unit, so logic would prevail that it's 2 million today. The investment method is based off a cash flow, so it's more for like single-owned buildings or commercial entities, industrial units, and so on, where there's a lease in place, a longer term lease, a commercial agreement that says this is how much we're going to receive on this income, and then investors come along and say, this is the type of return I want on that. This is how I see the risk, so I'm willing to pay this much for that property. So there's the relationship between rent yield and capital value. Then you have the residual method, which is a method that is for valuing land, so land and development opportunities. Again, we can cross-check it with the comparative method, but principally there's a method there whereby you're kind of looking at what the building is going to be worth in the future, how much it's going to cost to build it, and then a bit on developers' profit, and then whatever's left, the residual balance is essentially the land value, or a likely land value, an estimate of the land price. Then we have the profit method, which is more of a revenue-based assessment of the property. So things around us, the hotels, the leisure, the sports arenas, the cinemas, even petrol stations and so on, would be valued using a profit method. Schools, a lot of the schools are private, aren't they?
Yeah.
So schools would be another example. And then the last one is the cost method. So of course, cost and value aren't aligned in most instances, but some assets that exist, like government-owned buildings or religious buildings, we're not trading them. We don't have an income off them, so to speak. They have more social value, but we need to put a value on there. We'd use the cost method, which is land plus build cost plus depreciation, because the building's older.
Yeah.
In a very quick and overview.
Again,
they're the 5 methods of.
I know there's a lot more that goes into that. It's just quite good to get in a brief.
So that's how we differentiate those valuation methods. The PhD that I did, I mean, in the introduction you said I'd got a doctorate in property valuation, which is true. You're not lying. But the study was looking at how valuers, the variation between valuers in the commercial property sector here, are they faced with the challenge of are the values more varied or wider in a market like Dubai versus a more mature market where you've got better data and better transparency, and what would create those differences. So that study tried to examine at the time, it was between 2015 to 2018 or 19. So it was a fairly well-established property data market, but not as good as it is today. So it was starting to get a bit of discussion behind those things.
Interesting. Yeah, so that's good. I like those 5. That's one thing when I was noting down as well, because obviously that's part of what I do.
Yeah.
So I knew obviously elements of them, but I seeing them written down on that front was really, really, really good. So it's probably the last question we're going to have time for, and I want to talk about the future of Dubai, which you speak about towards the end, and I think it's very important for people who are like me, looking to stay here long term. But also from an investment perspective, there's people who have the right principles in place who understand the medium to long term gains. So let's talk about Dubai as a futuristic smart city.
Okay.
Where do you see this place developing real estate wise over its next 50 years? And I know you don't have a crystal ball, but based upon historic data that you've done this book, where do you see?
Yeah, I try, as you say, the final 2 chapters are like future directions, I think I termed it. So, what's going to be, how is Dubai going to evolve further in the future? So there was 2 main forces. There's sustainability, which you could kind of link into the smart city element as well, and then also the development of smart Dubai. So in terms of, I mean, just very quickly on the sustainability side of things, Dubai is a fairly young city. We've established its growth and development is a much shorter history than many of the countries that other countries, especially the one that we're from. The evolution on sustainability, the opportunity is that there's an ESG compliant mandate globally, and of course Dubai has an opportunity because it doesn't have to deal with the retrofitting problem that many other markets have. Things like ICD Brookfield Place, a good example of a well thought out and well planned commercial tower that has attracted, the best multinational tenants. They're going to be the investment product that institutional money internationally will want to buy into in the future. So it's likely to see that the green agenda, sustainability, LEED Platinum, well certified buildings will be what those institutions are hunting in markets like Dubai, because of course, linking back to one of those valuation methods, everything is cash flow plus risk premium, and that's likely to be more favoured if we've got the buildings that companies want to occupy, because
because my parents came out to Dubai for the first time.
Yep.
They're the last people you ever expect to visit Dubai.
Okay.
By the way, and my mum, she's very big on nature and sustainability, eco-friendly, all that sort of stuff. And her perception was, Dubai, what are they doing for sustainable? All the recycling, all that sort of stuff. And it made me research a lot more.
Yeah.
And even I, living here, didn't realize how, let's say, far ahead, because everyone's trying to get there. Obviously, people move different rates, but how the plan for it and what they already have in place, I didn't appreciate even living here.
Yeah.
So just last few minutes, maybe just touch on a few of what Dubai is actually doing sustainability, because it's very important.
Well, a lot of the. I mean, recently, last week, about the beaches, the public beaches, the spaces that are being opened up for the residents, and the social spaces, and the amount of green spaces that are planned for here are important. I mean, I think the sunshine and the blue sky helps with a backdrop of green. I think it's the perfect formula. So you need more green space in cities. Yeah. People are receptive to green space. It makes people happier, apparently. Yeah. I'll try. I'll try. But so those things are all valid reasons. Having more social infrastructure again. And the way in which we move around the city is different to other cities because of the climate, but it's all planning in a again, having the city mapped out in its zone so that we're not building too sparse. A lot of people say there's so much desert around. Well, there is, but we're not building that desert at the moment. We're trying to keep things within a fair distance. And I think, the 15-minute city concept is where most, again, smart cities are trying to adhere to, that you don't need to go further than 15 minutes to get everything that you need in your life, which again isn't too far off in most of the fact that Dubai is sort of polycentric. There isn't a one core city centre. There's multiple nodes.
That's the other thing I think people don't realise about that. There isn't really people maybe class the marina, near the Palmers, they're the tourist hotspots and downtown, but it's not and even with the communities, like Sample said, I live out in Silicon, within 5-minute walk of our apartment block. I have everything I can need. Got restaurants, mall, petrol station, like everything. And that concept I've seen replicated. I've obviously been, being a broker, you see lots of different areas of Dubai. I can see how that's been replicated. It's very smart.
Yeah. And I think also the fact that, the digital, technology breaks down that traditional travel problem that most cities face. And if you take that on a global level, which I think we have to view it more global now, is attracting that talent to come to Dubai.
Of course.
So keeping keeping your eye on chapter 1, how did Dubai become such a focal point for global real estate through economic diversification? And then chapter 12 finishes off by trying to see what is the government doing to sustain that and move that, I wouldn't say not exponentially, but at a even faster pace, and the digital connectivity with Dubai, and even the trading of real estate and doing things, the ease of the transaction, and dealing with that side of things. They're all going to be things that Dubai want to pioneer.
It all feeds back into one. Yeah. No, it's been an absolutely fascinating conversation. It's I've learned a ton. Obviously, I've read most of that. I've learned an absolute ton. But for the listeners, before we leave today, where can they find you? Where's best to connect with you?
Most of my connectivity online is through LinkedIn. So Dr. Michael Waters, I'm assuming I'm the only one, is probably the best search for that in LinkedIn. And happy to connect, and thank you for having me on the podcast.
No, so I said we'll leave a link down below to your LinkedIn, any other social posts you have, and to go and get the book off Amazon as well. Yeah, most local purchases have been done on Amazon, I think. So Amazon is one area. You can buy it directly from the publishers. So Routledge is the publisher. So either of those platforms would be brilliant. We will leave that link down below. So thank you so much for listening and tuning into the Dubai Real Estate Club podcast. Make sure to check our next episode where we bring in, again, answering your real life scenarios in the Dubai real estate market, so you get the answers from a trusted source that you're looking for. We break down their thought process as well. All right, thanks so much, and looking forward to tuning in next week.